Hello, friends. This is Vinayak Bhatt from VB Education, and I am back as promised with the second part of meaning and fundamentals of double entry and bookkeeping. In the previous part, we have seen the golden rules of debit and credit. In this part, we are going to see classification of accounts and double entry. So, let's begin. Classification of accounts. The accounts are classified into basically five types based on the following. The first account is assets. Now, as learned in the previous lecture, what is an asset? Anything which has monetary value is an asset. Cash is an asset. Your bank balance is an asset. The goods lying in your godown, they are an asset. Similarly, plant. Plant means factory, land, vehicles, machinery, building, stock, furniture. All these are examples of tangible assets. Again, the goodwill, your goodwill in the market, then your company logo, so any patents or copyrights which you own, any trademarks, and brand names and your softwares, they are all your assets which have a monetary value. Okay. Now the second classification of accounts is liability. Liability in pure Hindi is nothing but udhar. So business, anything which is liable to business, is business has to pay back that thing. So business owes the money to someone, that is liability. For example, the bank loan. Suppose while starting a business, you have taken some loan from the bank, you have to repay the loan. So that is a liability to the company. Few examples of current liabilities are bank overdraft, as we have seen in the previous lecture. Suppose someone owns a current account, bank will give that facility. Even though there is no money in the account, check will be cleared. So that is bank overdraft. Then sundry creditors, bills payable. Bills payable are electricity bill. Suppose you have not yet paid your electricity bill, or if you have not paid your light bill, so that is bills payable. Short term debt, advances and deposits received. Suppose you have someone has deposited money with you, right? You have to pay it back to that person. So that is a liability to the business. The business does not own the money, the business is just holding the money for a while. So when the business returns the money to the person, the liability will decrease. Okay. Similarly, outstanding expenses. These are all examples of liabilities. Third part is the capital. Now suppose Vinayak and Nisha, they start a business. So they initially they have to invest some money in the business, invest some assets in the business. For example, furniture or cash or bank balance, right? So that is the capital which is invested by Vinayak in business. So let's move on to the next classification of accounts, that is revenue and gains. Now, any running business, it will always make some certain gains. For example, suppose you have done any favor or some work of a person, he will pay you commission. If you own a property, then every month end you will get the rent for that. So that is rent received. Then suppose you have, if you have any stocks, and suppose that company will give dividend to that on those stocks, then you will receive the dividend. Now, what do you understand by interest of drawings? This also we have seen in the previous lecture. Yes, suppose in this case, suppose Vinayak, he will withdraw money from the business for his personal use. For example, say paying fees of his son. Then in this case, that is drawings. So unless and until Vinayak pays back the money to the business, he will have to pay some interest on his drawings. Next one, expense and losses. Yes, as you receive the commission, you also have to pay commission to others for the work done by them. If you don't own a property, and if you are making a if you are staying in a rental place, you have to make the payment of the rent every month. If you are a public limited company, then you have to pay dividend to the people or the shareholders. Similarly, If Vinayak and Nisha, they have invested capital in business, they will receive some interest on that capital. If there is any labor in your factory, you have to pay wages to the laborers. Also, you have to pay salaries to your employees. And finally, bill paid is nothing but your electricity bill, light bill. Once they are paid, they become expense and expense. Okay, and before they are paid, they are liabilities to the business. So try to understand the difference. Whenever expense is not paid, it is a liability. Once paid, it becomes a expense. Okay, fine. Now debit and credit. Now asset increase, debit. Liability decrease, debit. Asset decrease, credit. Liability increase, credit. Similarly, for expense account and income account, expense increase, debit. Expense decrease, credit. Income decrease, debit. Income increase, credit. So it is very important and you have to remember this. Asset increases debit, asset decreases credit. Liability decreases debit, liability increases credit. Expense increases debit, expense decreases credit. Income increases credit, income decreases debit. Okay, fine. Now let's move on to the next slide. Now let's try to understand the definition of double entry in accounting. Double entry refers to an accounting concept whereby assets is equal to liability plus owner's equity. Owner's equity is nothing but the capital. In a double entry system, transactions are recorded in terms of debits and credits. So finally, asset is equal to liabilities plus capital. Every transaction has two-fold effects and it affects two accounts in opposite directions. And if a complete record is to be made of such transaction, it would be necessary to debit one account and credit another account. Yes. So the meaning is in the word itself you understand double entry. What do you understand by double entry? Why it is called double entry? Because they are going to hit two different accounts. One account will be debited, another account will be credited. So in school we have learned Newton's law, third law. What is Newton's third law? To every action there is always an equal and opposite reaction. Similarly, here there is debit and credit. These are the two actions, but they act on two different bodies. Similarly, here the debit and credit will act on two different accounts. One account will be debited, another account will be credited. Now let's see few examples of credit and debit double entry system. Okay, so these are the few examples of double entry system. The first is commencement of business with cash. Now Vinayak starts a business with cash 20,000. There are two aspects to this transaction. One is cash will flow in the business. Second is Vinayak is the giver or proprietor is the giver. So two accounts will be debited and credited here. One account will be debited, one will be credited. Which account will be debited? Yes, the cash account will be debited. Why? Because cash comes in. And which account will be credited? The capital account of Vinayak or the proprietor. Because the proprietor is the giver of capital. He is providing the capital for the business. So capital is credited when it is increased. Capital is credited when it is increased. So credit capital. Okay. Now second scenario. Purchase of goods on credit from Ajay, rupees 10,000. Two aspects of these are, aspect one is purchase is an expenditure. Definitely when you are purchasing something you have to make payment. So purchase is an expenditure. Kharcha hai. Ajay is the giver. Ajay has provided the goods on credit. So he is the giver. So as I told you, before the expense is paid off, it is liability. Similarly, Ajay ko paisa dena baki hai. We have to pay back Ajay. We have not paid Ajay. So Ajay account is a sundry creditor account. So here two accounts will be hit. One is purchase account debit and sundry creditor or Ajay account will be credited. Yes, if you are purchasing goods from Ajay on regular basis, you have to create a separate account for Ajay in the name of Ajay. Fine. Now the third is cash sale of 7,000. Here cash comes in, sale is an income. So cash account is debited and sale account is credited because incomes are always credited. Cash is a real account and hence it is cash increases debit. Sale increases, that is income increases credit. Now received commission of rupees 500. Again cash comes in. Commission received is an income. So cash increases debit. Commission or income increases credit. Paid rent of rupees 800. Rent is an expense. So cash goes out. Whenever you are paying something, you are paying with cash. So cash goes out. Asset decreases credit. So cash account will be created as senior. And rent is a expense. So expense increases debit. Yes. So that's the end of it. Hope you understood. And that's the end of this lecture. Thank you so much. See you in the next lecture. Bye.